Crypto is on the rise, making that dough in the crypto paradise. Watching it go, buying low, selling high. Riding the wave, I'm here to stay, living in the digital age. No banks, no fees, just decentralized. It's crypto paradise. Ooh. No banks, no fees.
Alrighty, let's kick this thing off, Surf family. Happy Wednesday, November 19th. We got a great show for you guys today. It's the Bulls versus the Bears. That's the story of this market. I suppose as always, but it feels more intense now than maybe ever. Fear is at all-time lows, or all-time highs, I should really say, for the longest period since the FTX crash. What does that mean? Does that mean we break down further, or are we due for a bounce? We got Benjamin Cowan out there calling for $60,000 Bitcoin. Do we hit that? When do we hit that? We will debate. And our celebrities coming back into the space. We got a fun little story to cover for you guys today. A couple $1 million being bought by a guy who I like and respect. I know other people feel maybe differently about him, but we'll get to that as well. So, look, we're at this critical juncture here. We've been talking about it for a couple days. I guess the question on everyone's mind is, are we breaking up to the upside at some point? Or do we keep heading down lower like Benjamin Cowan is suggesting?
Well, let's look at the chart. The indicators, for the first time in a very long time, had Todd grab 33% of his position back on Bitcoin yesterday, halfway up the relief rally. Now, of course, we know we kept rallying a little bit and we've sold off a bit, but we still have a higher low and we've only given up some of the gains. So can Bitcoin show some constructive price action here and now hold these levels, like a 50% retrace of this move, and make another move towards this white line, maybe get us back to 95, and then we kind of dip again to 93, and we keep stair-stepping higher, because this is the way that Bitcoin is going to turn around. I know there's a lot of analysts that say, hey, we're going straight to the moon within 45 days, and everybody's picturing these God candles. I think it starts slowly, then all at once, meaning we had this little mini rally yesterday. People are like, oh, they felt good for a day, but now you sold off this morning. You're like, oh, never mind. Fake out. We're going lower. And then we grind up, and we get to 95. Then we drop to 97. Then we go to 98. Then we drop to 96. Then we go to 100. And then everybody gets excited, and then we get rejected and go back down to 98. I mean, I think that's what's going to happen. And then eventually we do have a God candle, which Bitcoin is known for in previous cycles. Not so much this cycle, but I think that's what we need to see. We just need to start somewhere. I know some people aren't getting excited, like, who cares? We're up $1,000, but you got to start somewhere. So let's get a couple $1,000, $2,000 days. Let's start grinding higher and leave the bears behind, because a lot of people sitting on cash are going to say, Bitcoin's back to 95, doesn't matter. We're still rolling over to 80, to 70, to 60. I'll just keep waiting, and then we're going to go to 98, then 100, and 110, and at some point, they will need to FOMO. But I don't think we're just going to see this green candle, God candle, V-shaped recovery right here, right now, like a lot of pundits are saying is going to happen. I think it's going to be a slow grind, slowly, then all at once for Bitcoin.
Yeah, God candle seems highly unrealistic at this point in time. I want to rewind, however, to the end of 2019. There are a lot of parallels between today, 2025, and 2019. If you look at the end of 2019, that was actually the last time we had a prolonged government shutdown under Trump 1.0. At the time, it was the longest shutdown ever. That just got beaten, last week with the shutdown ending from this year. And, everyone was saying, okay, shutdown ending up only. Actually, if you look at 2019, there were, I think, either 4, 5, 6 weeks of continued weakness in Bitcoin before we started to grind higher following that shutdown. And then you ask yourself, okay, what are the other parallels? Well, as it happens, that was actually the last time the Fed was in tightening, in QT, but they were ending it. They were ending it at 2019. And when they finally ended it, that's when you started to see some relief, but it wasn't a God candle. The God candle didn't come until they started the quantitative easing. But as soon as they stopped selling treasuries, mortgage-backed securities, etc., the market started to grind up and breathe a little bit. And so I think there's a lot of parallels. I mean, you look at the shutdown ending this year, everyone was thinking, okay, up only, no, further weakness. But the QT is ending here on December 1st. The rate cut is coming on the 10th. Do we see a replay of 2019 with finally some relief coming at the end of the year with a slow grind up? I think so.
Yeah, what's interesting about you saying the 2019 repeating, that would mean that we still have another year or so in the cycle. Because remember, the cycle didn't top in 2019. It topped in like 2020, 2021, which would lead us to another macro point of, hey, we think that this cycle is extending for 5 years, and you're going to have a top some point in 2026. So that is another thing that I like there. You see similarities to 2019. 2019 was not the top year. So that means we do have some potential time here for Bitcoin to continue higher for longer. Somebody who doesn't think we're going higher for longer, you talked about it. This is Benjamin here. Now, he is a perma bear, so keep that in mind. Always bearish. And if you zoom out on Bitcoin, that was the wrong move. But he says, I think Bitcoin has a date with destiny, 200-week moving average in 2026, probably around 60 or 70K. So he makes it very vague to protect himself because he does say 2026. And yes, the 200-day moving average has been a magnet for Bitcoin in the past, but that doesn't mean you have to hit it right here, right now. Bitcoin can still go to 250,000, 300,000 at some point in 2026, and then have its normal 60, 70, 80% correction to go down to that $60,000 to $70,000 Bitcoin mark in the actual true bear market. So I'm not on the side that I think that we head there right now. I still think Bitcoin has higher to go this cycle and in 2026 due to all the reasons we talk about on a daily basis. But yes, 60 or 70K is realistic even after the next bull phase for Bitcoin if it followed traditional metrics of dropping 60, 70, 80%. And whether or not you think those kind of dips do happen in the future for Bitcoin, that is debatable, as we do know that when gold got its first spot ETF, the dips did become shorter. Although the consolidation periods became longer, the dips of how volatile it was to the downside became less and less due to the institutional demand and the long-term holding nature of ETF buyers. So what do you think of Benjamin Cohen? Is the bull market over and we're heading to 60 to 70,000 right now? Or do we wait and we see new highs in 2026 and maybe we do have that traditional massive sell-off to that 60 to 70K mark sometime next year or even in 2027?
Yeah, a couple of things on Benjamin Cowen, right? I'm sure he's a very smart guy. Seems to be great with charts. But if you were to follow him and pay little attention to us bulls out there, would you even be in these markets anymore? Wouldn't you have sold out long ago? Because he's called many times where, okay, it's going lower, we're going to dump from here. It feels like every other one of his posts is sort of encouraging people to sell. And look, that may work for some of you really great traders out there who sell on the highs and then buy back in lower. And if you are able to consistently do that, good for you. You probably have more Bitcoin than I do at this point. But my guess is 95% of you aren't very good at that because that's a very hard thing to do. Psychologically, it's difficult, right? When markets are crashing, it's hard to pull that buy trigger because you got every reason not to. It could go lower, you know? So most people aren't going to be good at that. And if you've been listening to Benjamin for as long as he's been out there doing his YouTube thing, I don't see how you still even barely are in these markets. And we know, without a shadow of a doubt, that the triedest and truest way to make money in the financial markets is to just be in them for a long period of time. I know there's temptation to trade and jump in and out and try to maximize your bags and this and that. And again, if you're good at that, good for you. Most people are not. Most people are not. And so when folks listen to this channel, you're like, guys, you're perma bulls. All you talk about is up only. Well, no, we're not. I mean, we're bearish on certain things. Trust me, we're bearish on a lot of things about this industry. Do not get me started on an altcoin rant right now. But the fact of the matter is, the longer you stay in Bitcoin, just hodling it, in all likelihood, the better you'll have done. And so you come here for that dose of optimism, that dose of hopium, that hopefully encourages you guys just to hold and have that multi-decade time horizon. So Benjamin, I know you're a smart guy, and for all the great traders out there, good for you. But my guess is my buy and hold strategy has done better for me than most other folks. So I'm going to continue to preach the buy and hold. I know as boring as it is. But yeah, as to your second question, do I think we hit 60K? No, I do not think we hit 60K. If we hit 60K in the next couple months, then hey, four-year cyclist, you guys were right. Bears were right. We're wrong. And I will wave my white flag and I will admit defeat. I won't sell, but I will
at that
admit
point, that's
defeat
probably the
on
bottom.
air. I will not sell, but I will say you guys were right and the four-year cycle is still intact. But I got a lot of money riding on that's not true. That's not true. I don't think the four-year cycle was ever really a thing based on the Bitcoin halving. I think it was based on the business cycle, liquidity flows, Fed policy, et cetera, et cetera. We've talked about that a lot. And so, no, I do not think we're hitting 60K in the next few months. Could we, after, like you're saying, a big run-up, then a big crash? Yeah, perhaps. But I don't know. I just kind of sort of feel like with ETF and institutions in Wall Street that the 60-70% drawdowns are a thing of the past, just like the 70% in a month are a thing of the past. So, the market's evolving. It's less volatile. You guys kind of have to get with the times. And the OGs, I think, have a real problem recognizing the change that's happened in this industry. And Benjamin, I'm sure, is an OG. He still probably believes in the four-year cycle. But we got 2 more months here, folks. In 2 months, we will know without a shadow of a doubt that the four-year cycle is dead.
Let's go to the chat box here and get all these people's messages up on the screen, and then we'll go to the next topic.
I know you guys are bullish. Or at least you're tuning in for entertainment purposes. Maybe you're bearish and just like, look at these crazy bulls. These guys are nuts. Still pushing their, preaching their Bitcoin, even signs of weakness. But I'm telling you guys, like, if I had sold out on every time there was a 20, 30% dip, well, I wouldn't have any Bitcoin left. I'd be a working schmo again. Who wants that?
Yeah, we got Meek Chapo in the house, Jay in the house, Martin in the house. And then Bagito says the funniest thing is only this year alone, a lot of news were surrounding BTC. So I honestly think we are still a better high ahead of us. Yeah, I think you need to use ChatGPT to make that not run on sentences. But I agree with you. We're looking for higher in Bitcoin. We think this is a normal bull market dip. Obviously, if you follow us on the show and you're part of the Learn Crypto group, we've been kind of updating you on Todd Butterfield's positions and the indicators over there. Selling out on the last Bitcoin run, not at quite 116,000, but like 114,000, and just bought back 1/3 of the Bitcoin position yesterday on the slight run up around like $92,800 or $93,000. So slowly edging back into the markets, but still sitting on cash in Bitcoin, Ethereum, and Solana from higher levels. Still thinks they're not that there's going to be a massive downside, but just trying to get better indicator setups. Because what's interesting is the indicators aren't getting to oversold. So there's 2 arguments here. Number 1 is you go a lot lower because they need to get oversold. Or number 2, which is the one I'm leaning on, is you're actually in a bull market. So instead of getting a 38 oversold reading, you get like a 40 oversold reading, meaning that is the low for a bull market trend, which very well could be what we're looking at since we have had a normal, 30% drawdown, which Bitcoin likes to do in bull trends. So he's kind of waiting and seeing what happens, and is fine chasing a little bit if green comes because we sold at a higher level. So I'm rooting for 40 is the low, which means that, hey, we're also still in a bull trend, not in a bear trend, so you don't need that fully oversold technometer reading to get long. So we'll keep you guys updated on that. Make sure to keep tuning in live here, or get 200,000 surf or more to get more insight to that, or join us over on Learn Crypto if you want to see when he posts those things in real time.
Yeah, I think you bring up a good point. Trading vis-a-vis holding. I actually think it does make sense to have a trading bag. I even have a trading bag. I don't trade like Bitcoin necessarily, although with Frontier Fund, I guess we do trade Bitcoin indirectly through that. But you have your trading bag. In my case, altcoins haven't done well, but you can't win them all. It's a high risk, high reward sort of sector of the market, as we know. And then you have your hodling bag, because you still believe in Bitcoin over the long haul. You know money's being debased. You know this asset class is extremely tiny relative to global equities, etc. And so you have a hodl bag knowing that slowly it will grind higher over time. And then you have your trading bag. Maybe you're following along with Learn Crypto. Maybe you're doing it on your own. Maybe you're outsourcing that to professionals like Frontier Fund. Who knows? I have no issue with that. But if you're swing trading your entire bag throughout these markets. Man, most people aren't that good at that. And it's very difficult. It's very difficult to buy in on the lows. It's hard to time the tops. I mean, the whole thing is hard. That's why I'm like, dude, mostly stay away. Is For me, hodling is easier and usually more lucrative given enough time. So we'll leave that topic at that. What else do we got for today?
Well, we always talk about alt season and like all the hopium and vaporware that's, flocked into this ecosystem cycle after cycle, but there is still a lot of development over in crypto. And I saw that OKX now has a new Cetify platform, which is literally you can use on your app, and it's dexes directly on your phone. You don't need privacies. It's kind of self-custody, no laptop, no extensions. So I just like to see this type of stuff popping up by centralized exchanges, trying to think outside the box, trying to make DeFi a reality, the UI UX experience better, which means the lower fees and more access. Now we just need to get actual retailers to use it. We see Binance kind of doing the same thing with AstroDex and everything else, CZ supporting DEXs, not just sexes. And I think it's just a reminder that a lot of stuff is still being developed and built in crypto and blockchain and Web3, and we just need to get that retail hype back. And not everything was Fugazi over the years. Some things have turned into real usable products that are presenting DeFi opportunities, yield opportunities, and trading opportunities for crypto natives.
Oh, for sure. I think if you look at the top 100, I mean, probably 50% are Fugazi, but 50% have built real businesses, real products. People use them every day. And so let's not discount that. But I love to see what OKX is doing here with this kind of C DeFi, it's like a TradFi combined with a DeFi type app. It reminds me very much of the story we covered, I think, yesterday, the Aave app. The Aave app is very similar in this sense, right? Download it, deposit funds, DeFi sort of being played around with in the background and generating up to 9% yield for the users. This is where the industry needs to go, guys. If we're going to get the another 1 billion, 2 billion, ultimately all of the world sort of using crypto, it's not going to be through the complicated front ends and complicated DeFi that's been prevalent here in the past. We need to simplify things. Crypto and blockchain in the background, simple, beautiful user-facing apps in the front. That's how you onboard folks. So shout out to OKX, shout out to Aave. I actually need to download the Aave app. I'm very curious about that. $1 million in insurance and up to 9% yield. I mean, it sort of begs the question, how are they generating that kind of yield? But I assume it's legit because otherwise they wouldn't be out there stating it. So let's continue to follow that story. Maybe we can do a little Aave demo app. That could be kind of fun.
Yeah, and how do we get money into the markets? Where does the money come from? Just because retail comes here, nobody has money, right? We're in a recession. At least that's what 60% of Americans said. Well, here you go. Globally, there's 120 trillion plus of wealth and equities, 140 trillion in fixed income, 250 trillion in real estate, 100 trillion in the M2 money supply, which continues to go higher. Bitcoin is supposed to be following that. It hasn't followed that yet. Hopefully that happens by the end of this year and early next year. And of course, we know that people were lining up around the corner to buy the exact Pico top of gold at $30 trillion market cap. Holy cow, look at these numbers. Gold's got to be close, Bitcoin's got to be close, right? No, there's 1.9 trillion in Bitcoin market cap valuation right now. And remember, a lot of that is Satoshi's tokens that haven't moved in forever and are probably lost. So real capital based on actual Bitcoin that's available is probably closer to 1.25, $1.5 trillion, which is pretty wild to think about. Bitcoin is still so small. It seems a little hard. Can Bitcoin get above this unit bias? People see Bitcoin and they're like, it's $100,000. It's too expensive. I'd rather buy gold for $4,000 or XRP for $2.50. Is there a chance for Bitcoin to kind of break this unit bias and people to understand that you don't need to buy a full Bitcoin, number one? We've been trying to preach that since like 2017. But also that Bitcoin is still a fraction of the gold's market cap and many of the market caps of the top stocks that they're dumping money in. Hey, you're dumping money into NVIDIA or Apple or Google or silver or gold. All of those have multiples of market cap larger than that of Bitcoin. Is it possible? Or do we need to just, finally alts get a season unit buys, buy our shit coins, buy Ethereum at 3,000 before it goes to 100,000? What do you think the play is here?
I mean, the unit bias is a challenge for Bitcoin, but it takes all but 5-10 minutes of research and some critical thinking to wrap your head around the concept of market cap and fully diluted valuations. So, even a Bitcoin 100,000, highly, highly undervalued. To get to gold, Bitcoin would be what, $3 million? Is that right? Or maybe my math is
Yeah, I don't know.
incorrect.
It's like a 15x from here or
Yeah,
something.
so 1.5 million, something like that. So highly undervalued when you start to understand these things. Yeah, this is such an important tweet, and I love Hunter Horsley. Um, he always looks at the macro just as we do. Man, just a fraction of money flowing from equities gets us to 2x from where we're at. $2 trillion flowing in from any number of these, right? Set aside real estate. Real estate's not as liquid, but equities are liquid. Fixed income's liquid. M2 money liquid. Gold's liquid. They all could easily flow down. Can easily flow down. Like, Bitcoin, man, we're so early. It's 15 years old compared to gold. 3,000 years old. Equities have been around for 200 years. So we're a baby. We're new. People have to kind of understand that and accept that and understand the potential upside here. That's why, again, we preach buy and hold. It doesn't have to be that complicated. A couple $1 trillion flowing in from any of these asset classes and we 2x, let alone 10, 20 trillion, and then we're looking at 1.5 million dollar Bitcoin.
Yeah, I also think I saw that Hunter Horsley just bought BMNR, and because I saw Thomas Lee like quote tweeted it or something like that with the hardy eyes. So, Hunter Horsley is buying the dip on these Ethereum DATs, and that would tell you that he still believes Ethereum is going higher. Otherwise, he wouldn't be buying the Ethereum DAT, or he wouldn't be buying Ethereum spot either. So he's starting to see a value that makes sense for these DATs. Obviously, we've been talking about how the MNAV is at near 1 or below 1 for quite a while now, and now stock price is kind of just following the Ethereum chart. So there is opportunity there, and Hunter Horsley saw that opportunity as well.
Yeah, I mean, look, if you feel like the Bitcoin ship has sailed because it's at 100,000, it's already a $2 trillion market cap. I suppose you can talk yourself into that. I don't think it's a smart take if your time horizon is 10 years, but you can talk yourself into that. What you can't really talk yourself into is Ethereum being overvalued. Ethereum is sitting at a $500 billion market cap the last time I looked at it. So it's a 4x from here just to reach Bitcoin's current market cap, right? Obviously, for it to hit gold, I mean, you're looking at that's your 100x. So Ethereum, I think, really is the play if you're like looking to maximize upside and not take on a ton of risk. I also like Ethereum because it's a productive asset. First of all, the entire industry of crypto basically runs on this chain. Every day, people need to use Ethereum, spend Ethereum, and in turn burn Ethereum just to run a transaction within the crypto ecosystem. Let's set aside Solana for a minute. Basically, it's just all about Ethereum. Secondly, it's the most successful ETF, second only to Bitcoin, that's launched in the past few years. Wall Street loves it. Tom Lee loves it. And it's highly undervalued. So it's got utility. It's a productive asset. You can earn yield from it. It burns every day, sitting at a $500 billion market cap. To me, that's kind of, if you think Bitcoin's overvalued, that ship has sailed, we still got Ethereum, baby.
That's what I was gonna say too. Like if you're like iffy on Bitcoin here, I still think, and we've been saying it for quite a while, that Ethereum is the play for the remainder cycle and will outperform Bitcoin with similar risk parameters and pays you passive yield, 2, 3, 4% yield if you want to go that route. And here we sit here, and Ethereum is outperforming a little bit. We talked about this bullish divergence. We rallied right after the live show after we mentioned the bullish divergence, and let's see if we can hold gains today. And what do I mean about the Ethereum outperforming Bitcoin? Well, you can go to the ETH BTC chart here. Click on it. Let's zoom out here. I need to probably go to the daily. Man, this market cycle, this 4-year or 5-year cycle is makes you go to the daily instead of the 4-hour. I don't like it. And here we go. I mean, this is when we gave the all-out buy on Ethereum in the terms of Ethereum to Bitcoin dominant or price action chart here. This was near the low. It wasn't the exact low. We didn't catch the wick, but we certainly got close to it. And look what's happened since then. Ethereum has outperformed by 89% and also rallied from about $1,700 to where we are today at $3,000. That's like a 3 or 4x outperformance if you're looking at it in dollar terms. So, things are doing pretty good here. I still think that this ends up being a bull flag and we head towards these higher levels. And the thesis of how do we get, $10,000, $15,000, $20,000 ETH really lies on this. So, I mean, even if you get to this level, in this ratio, if Bitcoin gets to 150,000, that's going to put Ethereum close to $10,000. If we get back to the previous highs of last cycle for Ethereum to Bitcoin, and Bitcoin gets to, say, 250,000, we'll say 244,000 because I think we fall short, and that's the number I've been saying for a long time. That's how you get to like $22,000 Ethereum. So, obviously, it's still predetermined based off of where Bitcoin goes or ends up, but I still think that these higher targets are well in play for the Ethereum to Bitcoin chart. And then we'll see what the Bitcoin price is, and that will reflect on what the Ethereum top price is as well. But this is why I think Ethereum has a lot of upside potential. I don't think Bitcoin is done yet, and I think that the Ethereum to Bitcoin chart is going to rally at least another 100%. So that is a 2x of whatever price performance we get out of Bitcoin. So if you think Bitcoin does a 2x from here and goes to 180K, that means Ethereum is going to do a 4x from here and go to $12,000.
Yeah, that's sort of my targets, been my targets for a while on Bitcoin anyway. And then Ethereum sitting around 10 to 12K makes a lot of sense based on historical precedent and present sort of adoption patterns. You're looking at a 3 to 4x from here on Ethereum on a relatively low risk trade. It's not a shitcoin. Ethereum, a lot of people I think lump Ethereum into, I don't know, the Cardanos of the world, the XRPs of the world. You know, you go through the list of top 10 or 20 tokens, there's a lot of vaporware there. But that's not ETH. ETH is actually used every single day. It's a productive asset. It's getting burned every single day. You could earn sustainable yield on it by staking it. And I think adoption is just starting from a sort of Wall Street stablecoin standpoint as well. So Ethereum, relatively low risk, plenty upside, 3 to 4x conservatively this cycle. I continue to hold.
Yeah, and we're complaining about Bitcoin long-term dormant whales selling. That's what they're, recycling of funds that's going on right now is Bitcoin whales. The only Ethereum whale that I want to see selling, unless it's you, Crypto Armor, I don't know how much ETH you have. The only Ethereum whale I want to see selling when Ethereum goes to $5, $8, $10, $12,000 is Richard Hart. And I want him to be selling that to be pumping Pulse Chain. He's the only whale that I won't complain about when I see it on my feed.
True. He'll get there. That's, look, alts are beaten down right now. Let's not sugarcoat it. I mean, you guys know this. It's not even a point of dispute. But there is going to be a reversal at some point. We know things are going to get risk on again. It's going to correspond with Fed policy and quantitative easing. And I think Richard will ultimately do the right thing. Perhaps, around new all-time highs of Ethereum, sustained above $5,000. You start to see meaningful deployment into Pulse Chain. I don't think he has, $700 million of ETH just to, enrich himself. If he wanted to do that, he would have effed off, 10 years ago and sailed off into the sunset. You never would have heard from him again. So I think, time is not right for altcoins, but it will have its moment in the sun, and we'll be there for that.
And I think that liquidation crisis that we saw was pretty bad timing because if you remember the timing of that, Ethereum was up there above $4,000. Richard Hart, or whoever, I'll just say Richard Hart because that's what I think, started tornado cashing that $750 million of ETH in preparation of probably dumping ETH and pumping Pulse Chain due to the fact that he said many times people don't like selling things cheaper than they bought it. And remember, he bought all that ETH around 3,800 to 4,000. And then shortly, while he's tornado cashing, we had the liquidation crisis, and that is what has sent ETH lower. So it seems like we were just on the cusp of having some fun. Pulse Chain was breaking out. Remember, the head and shoulders pattern played out. We were above that magical green line for a couple hours, and then boom, liquidation crisis, and it kind of ruined all the momentum. And that tornado cash Ethereum certainly didn't get sold for less than that $3,800 level. So that's why we have not seen it rotate into Pulse Chain. So we were right on that cusp. I know that's a story of this whole cycle because Ethereum still really hasn't gone to a new all-time high. It's hit that 4,800 level like 1, 2, 3 times. Then we were back above about 4,000, looking good, getting momentum. Bitcoin 116, and then boom, liquidation crisis. So, that's been the story, and we'll see if it plays out. And hopefully these 4-year halving cycle guys, they've been selling since September and October around 109,000, 110,000. Very few of them sold at the highs, and hopefully they're running out of funds and the great rotation can go underway and Bitcoin can continue its journey to new highs for this new 5-year cycle. And again, if we go to 60 or 70 and Ethereum's at 2,000 and Pulse Chain's still down here near the lows, we got to say, hey, we were wrong on the elongated cycle. We made some profits along the way. And, now we're here for another cycle, and you're stuck watching us again for another 4-year cycle that's coming soon.
I can't think of anything more fun for the viewers than just hanging out with us every day, being pre-rich as hell. Just being super pre-rich for another year.
Bringing hopium to your life every morning.
Yeah, that sounds that's like you died and go to heaven, isn't it, folks? But on a serious note, I do want to circle back to a point that you made there around October 10th, 10/10, a day that will live in infamy. I don't know though if the market has fully appreciated how truly impactful it was. Negative way, of course. We're at 9 or 10 on the fear gauge, and we've been there for over a week. We haven't seen this long of this much fear since FTX imploded at the end of the 22 bear market, when Biden and Gary Gensler were trying to eradicate the industry with lawsuits and indictments. So the fact that we're at that level of fear for this long, when there is really no sort of negative macro or negative, say, political, influence going on right now, is really astonishing. And I think it's attributable to 10/10. That's my only reasonable explanation as to why we would be. I mean, obviously the price. That's probably that's the first cause for this much fear for this long. But then you ask yourself why the price, and then why the sentiment being this negative. I think 10/10 had a greater impact on this industry than maybe we felt or were led to believe initially. So it's going to take a little bit of time to climb out from the how many billions of how many billions of cryptos were liquidated on that day, like 10, 20 billion. I mean, it's an insane amount of money. Were liquidated that day. So it's going to take us a little bit more time. Are you surprised, though, to see this much fear for this long when the macro situation is not all that bad?
This is the first time in a long time that fundamentals are leading price in crypto. Normally, crypto is this speculative, haven where price is always leading fundamentals. And this is the first time in a long time that I think fundamentals are leading price. We have extreme fear. We have red candles. We have people saying the 4-year cycle is over, meaning we're going to $60,000, $50,000, $40,000 Bitcoin right now. Sell everything. You already should have sold everything. And then, you see the macro news. You see QT about to end. You see more interest rate cuts. You see QE. You see the president and the Fed next year wanting to be bullish. You see $2,000 stimulus checks coming out next year. Japan is starting their QE and stimulus right now into 2026. So it's just this battle of wills, and there's massive fear right now because you hear all this good news every day, but then you look at price, and it's down and to the right. It's all red. Holy cow, that liquidation crisis is the new FTX. Oh, we look at FTX, we went lower for longer, and I think that's just the rinsing of OG whales and people flooding those positions as well. Remember, these OG whales still know about Bitcoin. So if you sold 9 billion Bitcoin at between 100 to 110,000, do you think you'll never buy Bitcoin back? Do you think if you can FUD this thing down, or you're right on the 4-year cycle and it goes to 60 or 70,000, you're not going to buy back? So I think this is just a lot of whales talking their positions. Also, if you sold 9 billion of Bitcoin, I think you can afford some hit pieces from press. Press isn't that expensive, 200, 500, $1,000, and you have 9 billion. If you're looking to buy back, people be like, why would they even bother with that? It happens all the time. All the centralized exchanges do it. There's hit pieces on founders all the time. So if you think somebody with 9 billion in cash isn't going to make some efforts to try to buy back cheaper, I think you're silly. And I think part of that is what's going on too. So I just think fundamentals are leading price here. The fear is, starting to set in even like perma-bulls like ourselves, because we're like, well, fuck. If 2 to 3 months from now we're lower than we are here, maybe these 4-year cyclists were right. And then what do? Do we panic sell out? I mean, us probably not, but other people maybe. So this is an interesting time right now. But the fact that we've had this fear and greed index at 15 or lower for 8 days, the longest in history, tells me that, hey, maybe a bottom is near. And Thomas Lee himself even said he thinks Ethereum bottoms this week by Sunday. So is the bottom already in? Are we truly going to bottom by the end of the week? We'll see what happens. We believe yes. We believe that QT will indeed, in fact, end on December 1st. We believe that, yes, there will be another at least 0.25 cut of interest rates in mid-November or mid-December, and things will turn around faster than you can think.
Yeah, you know, we're positive as always on this channel. I think the fear greed thing, you look at it, it's really driven by the price. I mean, that's normally what it comes down to. When price goes down, fear goes up. When price gets better, fear, we go into greed. You do bring up an interesting point, though, and could this be sort of based on the incongruence? I thought it was going to be higher now because, it's the year after the halving, and we should be at all-time highs, and we should be in peak euphoria, and really it's the opposite. And therefore, I'm even further depressed. I'm even further fearful because everything's broken down. Nothing makes sense. I should be rich, but I'm poor. And therefore, I'm extremely fearful. It could be that. It probably is that. So look, again, I just go back to your three choices in these markets, ladies and gents: buy, hold, or sell. Buy, hold, or sell. And if you're a Bitcoin whale sitting on 9 billion, then go ahead and sell. You've made it. You held through the shit. You're financially, you've made generational wealth. Go ahead and sell and diversify into other assets. But if you're relatively new to this industry, you have, half a Bitcoin to your name, a couple of Ethereum to your name, maybe you got some altcoin positions. It's moon or dust time for you guys. I mean, you're going to sell at the lows, take a loss? I don't know. That never worked for me. There were times I could have sold. Hell, Ethereum. I remember when I first got in this industry, Ethereum, we bought at the highs around $1,400. I remember, my wife and I. Back in, I think the beginning of 2018, if I'm not mistaken. We held that shit all the way down, dumped all the way down to $90. I remember distinctly Ethereum hitting $90. I could have sold then. No, the industry is, it's over. It's all a scam. I'm all pissed off and angry. Just sell. No. Not only did I hold, I decided to buy more. I decided to load up more. I bought more Ethereum at $200. And you just hold. You just have conviction, guys, and patience. So buy, hold, or sell. That's what the billion-dollar whales did. I think that's what you guys should do too.
Yeah, I'm just looking at the markets right now. It looks like NASDAQ is actually up 1.43%, up 350, making back some of the ground it lost yesterday as it closed down about 400. NVIDIA will be interesting because I think the earnings are post-market. Remember, we've been saying a lot. NVIDIA is going to directly affect the markets. It's one of the biggest stocks in the indices, so it affects the industry in traditional markets. That's going to impact what Bitcoin and Ethereum do. Because remember, if they do their earnings when the market is closed, and they miss earnings, and boom, NVIDIA gaps lower, then the stock futures gap lower, and then everybody in Bitcoin and ETH are going to panic as well before the market opens, and it's going to go lower tonight. But if Ethereum or if NVIDIA does well and beats earnings, and it gaps higher, there's green on NVIDIA or even flat, then the stock indices will be green or flat, and then everybody in Bitcoin and Ethereum will feel a sigh of relief. Well, why is NVIDIA tied to crypto so much? It's not only that the fact that NVIDIA is such a big player in the industry and going to directly affect the outcome for traditional markets, but NVIDIA is tied to crypto for a very long time. When I first bought my first NVIDIA shares, it was because of crypto and gaming. Why do I say that? Well, that's when gaming on your computer became a thing, and NVIDIA had the most powerful GPUs. But what else did you use the GPUs for? It was mining cryptos. At the time was Ethereum, Zen, Verge, Zcash, and so many more. So that's why they have been tied for a very long time. Since like the 2016-2017 cycle, NVIDIA has been tied to the crypto markets, and now more so, not only because of GPUs, Ethereum you can't mine anymore, some you still can, but because of AI and the AI trend that's happening with NVIDIA, and that affects crypto as well, because why? We have a ton of major large cap projects in crypto, in Web3, that are AI, utilizing AI and are AI driven. So NVIDIA is very, very important, and we will see the inflection point at least for a short period of time, a few days or a week, based on what happens with NVIDIA after the market closes today. So I might do a short form video depending on what happens there. It might be me crying because NVIDIA missed earnings and Ethereum drops below 3,000, or it might be me saying, hey, look, we are right. We're at a major inflection point. NVIDIA beat earnings. Stocks are going to open green. Ethereum's up $500 in one candle because of NVIDIA. That can happen, And it's crazy that we are sitting in a place right now where one company, NVIDIA, and the Fed really directly impact the future of us being pre-rich for the next 5 years, or us being pre-rich for the next month and actually turning into some riches.
You hear that, analysts? Let's get those expectations under check here and a bit reasonable so we can beat the earnings, but beat the expectation. I actually don't really care, believe it or not, what happens at the end of the day here with NVIDIA and the price. Because I'm a long-term value investor, and if you understand what NVIDIA has been building in the core of its business, and you believe that the AI trend is just going to continue and ramp up further and further as, 2020s grind on here and we get into 2030, 2040. Does anyone really think that AI is going to be less prevalent in the future than it is today? I mean, that's a ridiculous take if you think that. So, NVIDIA is basically the hardware and the infrastructure for AI. They are the pickaxes and the shovels of, the AI gold rush here. So, to me, if you're selling it now, if you're fading it now because it misses earnings, whatever is under expectations for a quarter, I just think you're missing the forest through the trees there. So I have NVIDIA just because I've diversified 401ks and IRAs and all that stuff. And I have the index, and I own the indexes. That's the big. That, by the way, that's the biggest percentage of the S&P 500 is NVIDIA because it's the most valuable company in the S&P 500. So I hold it. I'm bullish on the AI trend. I don't think it's slowing down. I think it's going to accelerate as time goes on. I'm not too concerned about what end of day brings for that reason. But yeah, look, if you're trading crypto, you're in and out. I mean, yeah, it's going to impact things, I think, here the next day. So looking out for your video, Nick. But I'm long-term bullish on AI. I don't understand why anyone would want to fade it now.
Yep, we shall see. That has been on all the news. Has the AI bubble popped? And of course, in the short term, maybe, but in the long term, I think we still go higher for many of these assets and, of course, AI. So I'm still looking out for good undervalued AI plays, new AI companies, new AI cryptos, and believing that, hey, if the cycle isn't over, I think AI will play a major impact in the remaining of the cycle, whether that's 3 months, 6 months, or a year from now in 2026. AI is going to be talked about and going to be very important when it comes to opportunities in both traditional and crypto markets.
This discussion of an AI bubble sort of irks me a little bit. I think a lot of people just define bubble as, in my mind, the asset's too expensive. In my mind, according to my opinion, the price has gone up and to the right for too long, and therefore it's in a bubble. They don't look at the fundamentals. They don't look at the underlying business. They're not thinking 3, 5, 10 years ahead. I actually had a discussion yesterday with a friend of mine in town. He sold a bunch of his stocks this week. And I was like, oh, because you're going to buy back in lower, I assume, right? Like, just how could you, think that? Because he's my age. What are you retiring next year? Are you selling all your stock because you're retired? No, like, what are you doing? Why are you selling your stocks right now? But, he believes it's a bubble. And I don't know if that's his own belief or, because the mainstream media pushing this bubble narrative. I just think, look, we're going to look back. We're going to look back in 5 years and you're going to say, damn, NVIDIA, whatever, I don't know what the price per share is right now. God, that was a gift. I wish I had bought it then. Or I wish I continued to hold it because it's 3-5 times more valuable in 5 or 10 years from now. I think that's what we're going to be looking at, guys. That's been the story of NVIDIA since 2016, hasn't it? Back when you could have bought it when it was powering all of crypto, as Nick just mentioned. So I just don't think this AI train is slowing down. Yeah, there might be peaks and troughs and pumps and dumps, etc. But 30 to 40% crash or something. I don't know what people are expecting with this bubble talk, but it's not going to happen, guys. It's just simply not going to happen. So hold on to your blue chips. Hold on for 5, 10, 20 years, and that's how you make it in these financial markets.
Yeah, we really covered everything. We talked about Bitcoin, Ethereum, the Fear and Greed Index, the 200 moving average on Bitcoin's at 60 to 70,000. Well, Nick, we didn't talk about alts too much today. Well, that's because nothing's going on. All of them are slightly red or flat. We don't see opportunity right now in chasing any new shiny objects, and we know that many of you don't have much capital to buy new altcoins right here, right now. So we need to see some more confirmation in the markets, and we'll follow up with some alts that we'll take profits on, some alts that we'll rotate into, or some new alpha that we have for you guys. Obviously, altcoins have been very, very choppy. We found a bunch of good altcoins, 1 month ago, 3 months ago, a year ago. They've done mini X's, 5X, 10X, 20X, even 100X. Some of those we took small profits on, some profits on, still held some bags. It's just wild that altcoins just had no follow through. Like some of these alts, we call them, they do a 5 or 10X over the course of 1 month or a week, and then they go right back to where they started. So maybe you can take out your initials, but you really haven't even had time to really capitalize on the full move for a lot of these altcoins this cycle so far.
Yeah, alts have been extremely disappointing to say the least. But I guess in hindsight, in retrospect, it's really not surprising that alts have been just at best a pump and dump, right? At worst, just dump. And it's because there's no new retail, there's no new capital coming into the space. So until we get that, until we get majority retail risk on, we get new people coming in because Bitcoin's had a sustained pump, Ethereum's had a sustained pump, everyone's forgotten about 1010, et cetera, then yeah, this is how alts are going to be. Despite the best efforts of our friend Dave Portnoy, who apparently, and I don't know, because he's a funny dude, he's a jokester. I think he's serious, but I don't really know. He said he bought, what, 2 million in Bitcoin and XRP?
Yeah, he's definitely serious because now he's doing his Davey Day Trader presented by Kraken. He started doing that again, and he only does that when he's making plays in the market, or if the markets are very frothy, because he's very smart. He only has a certain amount of hours in a day, and he only does it to get views and clicks when it makes sense. So he does stop those from time to time. But I can't find his tweet because he tweets so dang much. But yeah, Dave Portnoy did buy, I think, $1 million in XRP, $700,000 in Bitcoin, and $400,000 in ETH. So I think those are out of whack. I don't know why he loves XRP, but again, that goes to the blue-collar guy loving XRP. I don't understand it. I think those should be flipped. If anything, you should probably do $1 million in ETH, 700,000 in Bitcoin, and 400,000 in XRP. But it doesn't matter. What this matters is it doesn't matter that he's worth hundreds of millions of dollars. It doesn't matter to him that he's putting $2 million in the market. But why does it matter to you? Dave Portnoy has a massive following of retail watchers, retail individual, blue-collar workers, sports bettors, sports watchers. And that has only gotten bigger over this past year because why? They did a reality TV show on Jersey Shore, which got a bunch of new viewers. And also he was just picked up by Fox Sports Network to do a daily morning show that he is on. So his viewership continues to expand, and now he is buying and talking about Bitcoin and crypto again during a dip. So this is an opportunity that maybe we can get some more retail eyes. Now, red candles does not make retail get over the hump, but if we get some green candles, and Thomas Lee is right, and the bottom's in for Ethereum, and we start running, well, you think Dave Portnoy, this is what he does for a living. You think he's not going to be loud and live and doing shorts about, holy cow, I'm up 20% on my Ethereum, XRP to $3, we're going to the fucking moon. You don't think that gets retailers to buy? That's why it's important. I don't like celebrities increasing their tokens, and they know nothing. They're trying to use their fame and their audience to make a few bucks. But people like that are in the trenches with sports, talking about crypto and actually full difference. I remember, and I had David Portnoy. Hey, did you hear David Portnoy is buying ADA? Or David Portnoy is what no interest. David Portnoy starts. Now they're asking me questions about the tokens that he's buying.
Funny how that works, isn't it? The audience knows that. Yeah, I agree with everything you said. I mean, the biggest thing I think on social bought at the lows, because you can envision a world in which if we don't, he's I'm selling. He's gonna sell it at losses. By the way, he loves taking losses and what's it called?
Millions of dollars. You can just take losses left and right. Matter.
Exactly. Yeah. Right. But I think it's exactly as you said. Correction anyway, and then I'm up 20. 30%, XRP, the moon, blah, blah, like everything you said. So I'm happy.
To be
Sure,
honest.
most of yours, but it's not blue. It's just people who aren't deep into crypto.
Right.
When you're not deep into crypto, you look at things at a very surface level. We've all done that. I mean, I bought XRP in 2017 myself, back when I was new to cryptos. We've all probably bought into XRP at one point or another. And then you kind of start to dig into it. You're like, oh, it's a ghost chain. Oh, banks never adopted it. Oh, the founders keep dumping millions and millions every month. I'd rather buy something that's a little more substantive with some, real fundamentals behind it, like maybe it's Ethereum, for example. But it takes a few months. It takes some critical thinking and some research. And if you're Dave Portnoy and you're sitting on 100 mils and you don't have time for that, you're just like, oh, this looks cheap. It's in the top 3 or 5, whatever, of all coins. And, if it goes to $10, I'll make a lot. That's all anybody thinks. So it's not a blue-collar thing, I think, so much as an inexperienced thing. But want to hear from you guys. Want to hear from Frank. What's going on, bud? Zup. How's life in the red? Well, you know what? We try to stay even-keeled, man. Green, red, we're mostly the same. We try to stay bullish, think long-term. I think that's how you make money in the markets. You don't make money by panic selling. So, you got to have some conviction here. Nick was too excited, so he's breaking it. Oh, the internet connection, I guess, was down for a minute. XRP is a meme, according to Fred. And look, isn't it kind of like a lot of things in this industry are kind of a meme? But for whatever reason, they've kind of found the right alchemy of characteristics to get the normies excited about it. So you can't hate them. All you can do, I guess, is educate folks. Like if your buddies hit you up at some point during this bull run and they're like, what should I invest in? They'll probably ask about XRP, and you're going to steer them away from it because that's your job as someone who's experienced and knows about this industry. So that's our, our commitment to you guys. Stay away from that vaporware. But yeah, I'm with you, Frank. I'm with you, bud. I think we are at the precipice of QT ending. We know that for a fact. It's not even like I think. It's like Powell went out and stated it, and it's now the policy of the Fed that they are going to stop selling treasuries, mortgage-backed securities on December 1. That's a fact. And if you look at previous cycles, look at 2019. As soon as they stopped that, the market started to breathe and started to grind higher. And then, once the QE came into effect, that's when we had the parabolic move. That's when we had the alt season. So we're on a longer cycle, guys. It just is what it is. The 4-year cycle's dead. It's been dead. I cannot wait for like 2 months from now when we've been vindicated and proven right. But I got my white flag. I got my white flag in case I'm wrong. I'll break that out in case I'm wrong. But I don't think I'm wrong here. I don't think a lot of the analysts who are looking at the macros like we are, I don't think they're wrong. I don't think Thomas Lee is wrong with all his quants and his entire trading firm behind him analyzing the markets ad nauseum all day, every day. I don't think they're wrong. So, just decide which side of history you want to be on. You want to be on the side of the dumpers and the bears, or you want to be on the side of the bulls and the hodlers, and we see each other in Valhalla.
The time is coming. We shall see. Bitcoin down here to 91,000. Ethereum down here trying to hold above 3,000 still. A lot will be determined in the short term on NVIDIA earnings after the market closes today. We are watching closely. Obviously, on Bitcoin, you still have that, buy zone that we've had in place at 86,000 to 89,000. If that happened, that would be a 32% drop from the high, which still falls in the realm of normal bull market consolidations, normal bull market drops. So we don't want to go below those levels. I really don't even want to see those levels because there is some people who are bears who are like, I'll buy when it gets back into the low 80s. So I hope they get left behind and hopefully hold these 90K levels, and they have to FOMO in for higher prices. Let's see if the market wants to punish those individuals or if it wants to get the fear even lower somehow, even though we've been at 8 days now of extreme fear around a 15 mark, which hasn't been seen since the FTX debacle many years ago.
Those bears that claim they're going to buy and lower, they almost never do.
They always lower their targets.
They always lower your targets. Because, look, if you sell, first of all, that tells you don't really believe in this asset class. You don't really have a lot of conviction. You're just using it to, increase your fiat, maybe buy yourself a fucking, Lambo or whatever. some depreciating asset. You're not looking at the bigger picture of the debasement of all fiat currencies over the past 50, 60 years since they went off the gold standard. You're not looking at the world in the same way as a hodler looks at the world, the way I look at the world. And so if you don't have conviction, why would you buy in when the shit's in the shitter? You're just going to think it's going to keep going lower. You're going to keep telling yourself, I'll buy when it's lower. It doesn't hit your target. And then best case scenario, you'll buy back in higher. Most of the time, you're just gone from this industry forever. I know this for a fact because when I started crypto, there were 7 or 8 of us in my friend group. 7 or 8 of us. I was the crazy one who believed, I guess, more than everybody else because they, sold out over the years. And they didn't come back in. You don't sell at $20,000 Bitcoin and then buy back in when it's 80. You're done. And just conversely, you don't sell when it's 80 and buy back in at 200. You're gone. You're done. You won't buy Bitcoin again. So don't be that guy. Don't be that guy. And I just want to shout out to Frank. Thank you for joining the stream and bringing it back to Fed Speak. We love this Fed Speak here on Crypto Paradise. Yeah, they've been talking about no data, no cut, right? But I think that's a red herring. I don't think they follow through on that because the labor market is in shambles. Every day, we just got more labor market. We have more job losses today than expectations, led us to believe. 230,000 or something like that was just reported. Their expectations 210 or something. Not only that, you had companies like Verizon, 10,000 jobs cut this week. There was another company or series of companies, 150,000 jobs cut just prior. And you have the wise Fed commissioners or governors, I should say, like Christopher Waller's of the world saying, I don't even care what the data says in terms of inflation between now and December 10th. I think the job market's in such dire shape that I'm voting for a cut no matter what. And by the way, Trump is going to announce the new Fed commissioner, who I believe will be Christopher Waller. He's going to announce that by the end of the year. That just came out. So Trump will announce that before the end of the year. I think the Fed will come to its senses. I think there's going to have a few dissenters who just heads up their ass, still worried about phantom inflation. Really, it's the job market. I mean, this economy is not great. Unless you're an asset holder, it's not great. So the Fed needs to step in, save our butts, like they end up always inevitably doing. They always tighten for too long. Things look really shaky and bad, sometimes even tipping a recession, and then they overcorrect because that's what they do. They always overcorrect one direction or another. So likely overcorrecting to the easing side next. And that's when risk assets will finally pump again. Oh, you're muted, by the way.
Yeah, we see here at the poly market is starting to go back to favor the cuts. Remember, it was only a few days ago that the no change was up above 50%. Yesterday it was like 48%, and now the no change is down to 43%, and the 25 basis point cut is up to 56%. 50 basis point cut is up from 1% to 2%, and the actual hike is down below that 1% mark that it was sitting at for a while. So it seems like the poly market bettors are starting to lean towards a cut once again. Remember, when everything was selling off and the government was closed, we saw the no change and the actual hiking of interest rates starting to creep up higher and higher. Now, I still like these numbers. Number one, it agrees with us that a cut will happen. But number two, it's not so egregious and not a 98% sure thing that it's already getting priced into the market. So this gives us upside potential if, in fact, they do only cut by 0.25%, which I think they will do in December 9th. Remember, there's chances of further cuts January 27th, March 17th, and even to April 28th, which is right before Powell probably will be gone forever in May. Their target is still what? What was their target? 2.5% or something? And we're still in the 4s. So there's still a lot of cuts that can happen, a lot of QE that can happen, and a lot of QT unwinding that can happen over the course of the next 3, 6, and even 1 year from now.
And the other thing they have now, too, is further justification from a data standpoint that tariffs do not cause inflation. And in fact, they are disinflationary. The San Francisco Fed, which is a branch of the Federal Reserve, looked at 150 years of data and just came out with this comprehensive report, which shows that tariffs don't cause inflation. And that was one of the big reasons why most of the governors were like scared of cutting rates, because they're like, oh, well, it's definitely, with everything Trump's doing, big bad orange man, everything Trump is doing is going to be bad for average everyday Americans. Because I secretly hate this fucking guy. So fuck Trump and, fuck him and fuck this administration. And so no cut. Tariffs bad. Man. That's what's going through their lizard brains, guys. Like, let's just be honest here. But now they have data. Now they have studies. These academic wonks, they love their studies, don't they? They got the studies showing that tariffs don't do what they said they're going to do. They're not inflationary. And then, of course, you look at the job market. You look at everything else going on. And you're led to, and the fact that they want to cut more, like Nick mentioned. And I think you're led to the inescapable conclusion that they will cut. But I do love the fact that that's not priced in yet. That's such a big point to make, because I know we've talked about cuts before, and it's not really worked out from a price performance standpoint. I think now is likely the time. It's also corresponding with the end of QT. Now should be the time where finally the cut and the ending of QT shows up in the prices of risk assets. It hasn't happened yet, but it's going to happen, guys. Look at 2019. Everything's playing out exactly as 2019 did, and then look into early 2020 and ask yourself whether you want to buy, hold, or sell.
All right, I think that was a good show. If there's any other comments, questions, or concerns, throw them in the YouTube chat now. Throw them on Twitter. Maybe we'll get to them. And stay tuned. Maybe we'll do a short-form video on NVIDIA later today. Maybe we'll go live from Learn Crypto later today. We shall see. And we're watching these markets just like you. It's not fun when there's red candles. That is for sure. There's not much altcoin stuff to talk about. People are low on their cash. Not a good time. And you're not finding yourself on the beach, that's for sure. But hopefully that all turns around here sooner rather than later.
You got to be a little masochistic to make it in crypto, don't you? You have to at least know how to embrace the pain, or maybe ignore the pain. Maybe not care so much about, the value of your portfolio in any given day. That's kind of helped me over the years. Just like, hey, guys, it's just money. It goes up and down. Whatever. If you start to care too much, you're like, oh my God, I'm losing money. I hate losing money. Sell. Those guys don't make it in these markets. So little psychological tips for you guys. We're not on the beach yet, but we'll make it there soon enough, guys. And until then, we'll see you on the beach. Peace out.